Oh, we are live.
Hello guys,
Hello.
welcome. Apologies for the delay, Sajeet sir, as well as viewers. It was my fault.
Yeah, I mean, he is busy with the live insurance numbers, which
Yeah.
just came in, and it's not looking good.
Not really, because there's very muted kind of growth that we're looking at for June. For overall, for the quarter gone by, it's not looking as bad, but June was a little weak.
It's not looking as bad. Means the industry growth is for 3%.
Industry growth is around 4-5%.
4.5%.
Yeah, around 4.5%, if I recall right.
And
Yes.
some of the most of the
Just
guys
put it up.
are at a low
Single
number.
digit.
Single
Yeah.
digit, right?
Industry growth financial year to date is 4%. June was
Q1.
negative 3%.
Financial year to
Yeah.
Q1, basically.
Q1.
4%.
4% and negative 3% for the month of June. So not looking entirely good.
And is this a seasonal? No.
No, there's no seasonality
So then what's
in this quarter.
so then what's impacting?
It's probably just weak growth and product mix changes which seem to be happening. So we saw that in Q4 that there were product mix changes which were happening where we were seeing a shift away from low margin
Q3,
units.
Q4 impact.
Yeah.
The change which is there.
Yeah. So not
The
Q3
surrender
to Q4.
value issue.
The surrender value issue has completely died down. We've started to see margins recover in life insurance.
But you're talking
Q4 was the recovery.
It happened in what, Q3 surrender value towards the end of Q3?
It happened in October of 2024. 1st October 2024
right?
was effective.
So that impact, then the impact would be felt in Q1 as well, right? Because of the base effect.
So sir, Q1 last year, we didn't even know that surrender value was coming.
Yeah.
Technically, I mean, for most part of the Q1.
So the growth.
So the growth currently is just purely, I think, it's just sluggishness of the industry. We've not really seen it pick up in substantial fashion. But I think what players are doing is they are selling products which are better margin.
Yeah.
And that is what is helping the stocks as well. And we have done a link on life insurance stocks. We've done a special piece on it where I'd said as to what the levers are, and there are plenty of levers. The largest lever is the fact that at least surrender value has not had a very big impact on the industry, both in terms of growth and margin. There was an expectation that there will be big impact. Pricing pressure will come in and all of that. All of that has not happened.
I was looking at your numbers. June numbers were negative for LIC, SBI Life, HDFC Life.
Yeah.
Then you have Canara.
June is very poor.
Canara, HSBC, Axis Max, and ICICI Pru are the only one with positive numbers.
Yes.
And Canara, HSBC, right?
Yes.
21% Axis Max, 21% Canara, HSBC, and 4% ICICI Pru.
Yes. 3% is Q1 SBI Life, which is not looking good. Of course, we'll have AP numbers or a better perspective on AP numbers tomorrow. And we'll also get the previews tomorrow. So we'll probably discuss this tomorrow at a better time. And those are also previews. I mean, those AP numbers they're not exactly on the ball AP numbers. So we'll have to take all of that with a pinch of salt.
But markets are negative today. I think IT is dragging the index. IT index is down almost 1%. We have TCS numbers which are going to be out after market hours today. So I think the street is pricing in some kind of disappointment, I think, with respect to the numbers. The street is seeing a flat growth in terms of revenues. Margins could be under pressure. The big thing to watch out for is the TCV, which is a total contract value, which they're going to add in Q1. They've been maintaining $8 to $10 billion as the normal range of TCV. Let's see in what range it comes in, and it's moving between, some have 7 to 9 and some have 8 to 10. So that's something which we need to look at, and the outlook is what which will be keenly watched. I think that's. It's not more about the numbers. The numbers have been discounted, I think, 3 months in advance. It's about the commentary and the view they have in the second half of the year, because first half is anyways been written off.
Correct.
In that sense.
Correct. But what are you expecting in terms of commentary?
when I spoke to them at the end of Q4, they were little optimistic in terms of the kind of orders that can come in. They were saying that there is an opportunity here in the sense that a lot of legacy businesses haven't upgraded themselves. So while discretionary spends are slow to come by, there will be large deals that may come in, and that would be something which will be driving. But now. I think we are almost 9 months and 3 quarters where we have not seen much of a movement in terms of interest rates. So that's something is going to be a big worry because given the fact that we are now pushing the tariff uncertainty a little further, at least till August 31st. And now I think what around 20 countries have seen the letters coming from Trump. So it needs to be seen how it's going to play out. Of course, there is going to be a commentary with respect to inflation and others which are going to come in. But my sense is that if TCS is able to maintain that order trajectory of $8 to $10 billion and able to give a good commentary for the next year, then I think it's going to be good for the IT industry.
TCS is also gives you a great pulse on BFSI.
True.
And BFSI, and correct me if I'm wrong, please. BFSI is it actually is the leader when it comes to IT recovery. So if BFSI recovers, slowly you will start to see others also recovering. Is that the right way to look at it?
Yes, 40 to 50% of the revenues do come from BFSI. You have North America contributing a large chunk in terms of geography, followed by Europe and East Europe, which that entire thing. But what is important is there are a couple of trends which are coming in the last 2 quarters. One is the GCC trend which is coming in, and now people are talking about it that it may be denting some of the revenue models for many of the companies because the businesses are going to move away to GCC, which is captive in nature. In that sense, while others are saying that there is an opportunity to help GCC set up in India, so that could be something which can be looked. There was a time when Indian IT companies used to go and buy out the GCC captive centers and add to their revenues. Now it's a new creation of GCC in the country. So whether they're going to hive up and give it to away, and that's a diverse model which is going to play out. But I don't know if that's something which is worth looking at or not. The second thing which is there is the kind of volume growth which they are trying to look at. If volume growth doesn't come in, then it's an issue, which for them. Pricing has been stable. I don't think from a global perspective anything has happened. It's basically the uncertainty about the discretionary spend and how long it will be lasting. So while we have seen a lot of IT companies announcing small deals in the last 1 quarter, just to keep the street busy, saying that there is things happening in the IT industry. There are a couple of sectors or segments which are slow. One could be manufacturing, the other retail is expected to be slow, and then you have ER&D companies which are facing some issues with respect to slowness in terms of order flows or delayed order execution which is coming in. So all these things are going to play a big role.
Perfect. So we'll start off with the earnings season today. Is there a particular sector that you're really looking out for in terms of earnings? IT, of course, is one and could well, and generally, at least last 2 quarters, IT has been a sector where the numbers, while they haven't been amazing, stocks have really moved.
True.
In both in the last 2 quarters. This time around, we'll have to wait and watch. But do you think, is there a sector that you are really looking forward to, other than BFSI, of course, because BFSI is my favorite.
Yeah, that's your favorite. And that's primarily because 33% of the index is BFSI. So you have to.
I'm joking. But
you have to, and I don't think the numbers are giving out any good vibes about BFSI.
It's not. Next 2 quarters.
Next 2 quarters is going to be a little tough for them.
Yeah.
But yes, I'm looking out for one is consumption themes, which is there. It's see the growth may be lower, but it is a growth which is coming in. So you may be disappointed because the Titan is, growing, or a trend is growing at less than expected, 20% instead of 25%. But it's still 20% is a big percentage growth which is there. The second is FMCG companies, whether it's America or a Godrej or any other company, they have indicated urban consumption revival or green shoots, which we are talking about, while rural segment is, cooling off in that sense. I think the rural segment is just is a slowdown before the next season comes in.
Correct.
And then it will again pick up, because that's normal. That's a normal trend which is there. Monsoons have been good, so your crop is going to be good, and then the consumption will be higher in that sense. So FMCG, watch out for FMCG for me, because I think they will see some kind of trend. Capital goods is I'm going to look out very carefully, especially with companies who are looking at exports from on a big way. Uh, I'm given to understand that imports have been high in Q1, and especially for many of the capital goods companies with exposure to North America or US, you are saying, because there has been a push to send across that. So there will be some growth coming in there, but it's going to be front loaded. Whether it could be a sustained one, it's something we need to look at. So that's one segment which is there. Renewables are going to be better off in this quarter in some way. I think from a power generation point of view, there might be slight slowdown because of monsoon. The kind of output that would be much lower. But from any other perspective, the capacity additions and others, which is healthy, which is happening across the board for most of the companies. And defense. While there will be I think this quarter will see a little bit of higher jump in numbers, especially because of the actions that we've seen in from a geopolitical times, because of some of the emergency procurements and which have come in and all. And the order book additions are going to be better, because what the government is talking about is that ordering around 2 lakh odd crores this year, which includes 50,000 crores, or in addition to that 50,000 crores of additional procurement which has been emergency procurement which has been done, right? So FY26 is going to be good for some of the defense companies from that point of view, and from order book point of view. So these are the sectors which are largely okay in that sense. Cement is the muted sector because of from a rains and monsoon point of view. It's the prices have slightly inched up, if I'm not wrong.
Yeah, they've sustained. Someone would have, one would have expected it to actually come off,
but they have. Yeah, so they have been. And infra wise, it's been a decent quarter. I mean, I haven't, from a roads point of view, the orders haven't flown so much. It's been slow ordering, which has come in. But yeah, and then you have the bigger sector of BFSI, which is again a slow play, which is coming in. So like JP Morgan was talking about it. Niraj was telling us yesterday that they're looking at 8 to 10% of growth. I don't know whether that's a very normalized kind of growth which we are
talking about. FY26 or just
26,
Q1?
I think 26 he was talking about.
He was talking about
June 26.
हो जाएगा सर मेरे हिसाब से 10% रिकवरी आएगा. लोन ग्रोथ भी तो वापस आएगा, थोड़ा बहुत रिकवरी भी आएगा.
Yeah, I mean, it's so far the estimates which I see is that Nifty EPS is going to go up by nearly 5%. Now we are talking about 8 to 10%. If 8 to 10% happens, then what JP Morgan is saying, the 30,600 target which they're talking about in next 1 year or something, that's going to come in, right? In that sense. So it's again an outlier. So it's going to be a tricky one. Means Q1, if you are able to hit that mark of 8 to 10%, then you are at good spot.
So this is what JP Morgan is saying. Earnings to be driven by healthcare, insurance, building materials, capital goods. Earnings to be dragged by auto, defense. So they're actually bearish defense, contrary to what you're saying. Staples, gas utilities, and muted growth on IT and banks.
So
that is
bank,
JP
okay,
Morgan stake.
banks we agree,
Yes.
IT we agree.
Defense you don't agree.
Defense I don't agree because I see there might be a surprise for us. And the other thing which they were talking about was initially, right? Or which one was that?
Building materials, insurance, healthcare.
Insurance is muted.
Muted, sir, but when you're looking at the overall
3%
quarter,
industry growth.
Yeah, industry growth is 3%, but when you're looking at the overall quarter, it's very much bottom up. So I'll give you an example. SBI Life is 3% growth for full quarter. HDFC Life is 14% insurance premium growth. This is total premium.
LIC?
Beg your pardon.
3%
LIC
again?
is 3% again. Negative 3% in fact. Not positive. No, I believe it's positive 3% for the full quarter, negative for June. So, what I'm saying is that it may not be as bad because you might see some bit of margin recovery giving tailwind.
Exactly.
But
I get what, but it's not going as per JP Morgan as well.
Yeah, it's not.
And
sir, this is very difficult to call.
And
you
healthcare,
and me both know.
And healthcare is doing decently.
Yes.
That's a
correct.
That's a segment which is growing.
Correct.
But that's not something which is going to drive your index up, right? Because they have a very small weightage in the index in that sense.
One fascinating thing, we'll shift focus from earnings to specific. We spoke about TCS. IREDA's numbers will also be expected. And those we'll speak with management tomorrow. The numbers will come out today. Now, there's very interesting that there's been a few notes which have come out on IREDA, sales notes, which seem to be bullish with regard to IREDA. I was just looking at IREDA's numbers. It's a 2,000 crore profit.
The Q1 update which came in on IREDA, did you see that?
Yeah, that was a good update.
Yeah, we are talking about disbursements going up 31%, loan book rising by 27%.
Correct. So it was around a 27% YOY growth on loan book. But I'm thinking about it like this. It's trading at around 4.5 times price to book current. If I were to extrapolate next year's profitability basis, the last year's growth, it's coming to around 2,000 crore of profit. So that price to book should shrink to 4. At one point, this price to book was at 8 and 9. It was closer to 300, the stock price. Now the stock price has come off and the price to book has also gone up. Or rather, the book value has gone up because profitability has come in. My point being that last 6 to 7 months, we've seen a sharp correction. So now the sales notes question is, does it start to warrant interest? And since the time we got these sales notes to right now, the stock is up 4% since that point. So,
so there are two tailwinds for this company. Yes. One is the renewable energy space, which requires a lot of capital, and they're showing that in form of loan disbursements and loan sanctions were up, if I'm not wrong, 29% in Q1, right? So that's one, that there is a demand or capex happening with respect to capacity creation in renewable energy, which is there. The second one is the T&D space, where they have to invest by another 9 lakhs by 2030.
9 lakh crore.
9 lakh crores.
Yes.
By 20, and so for them, the pipeline is
very strong.
Very strong. Very strong for. I think perhaps in the infra lending space, IREDA may be the only company which has a good pipeline and visibility of what the target is.
Correct.
Right. Correct. No other company would be. You can talk about a bank, SBI or a ICC or others or any other bank, but they will talk about various sectors and how each of the sectors or cohorts are working in it. But for them, their cohort is very simple: renewable energy and T&D. The T&D has been created so that the renewable can be evacuated. So the targets are very clear for them, and the pipeline is very clear for them.
Yes,
it's only the kind of capacity they have to finance it, right? That's the only thing which is there. So for me, someone who looks from a 5 to 10 years horizon, if everything is going to go as per normal, renewables start adding and we are hitting the 500 gigawatt target by 2030, then we need equally the T&D to be there. Then it's there's no competitor for IREDA in that sense.
Correct.
So you have the general scheduled banks or the private sector banks. than coming and competing for the same pipeline which is there.
Correct. Yes, so that is the case. And then we had REC and PFC.
Yeah.
An initiating coverage note, overweight rating. I believe it was Morgan Stanley, who's come out now and given it 21 to 23% upside. So and this one is pure valuation play, right? Some of these stocks have really corrected over the last maybe 8 to 9 months, and in this market upswing, they've not recovered. Right, and these were very much loved names in 2023, 24, maybe to a certain extent even in 2025, and that's because there was so much recovery tailwind which was happening. Now as recovery start to fade a bit, right, you're starting to see that shine come off the ball, and that's what Morgan Stanley is really highlighting. Are they starting to go back to that category of unloved and not being fully recognized? So I was looking at the price to book current is around 1.3 for REC. I'm sure it's lower for PFC, and it does around 15,000 crore, 16,000 crore of profit, distributes around 5 to 6,000 crores of dividend. So around a 3.5 to 4.5% dividend yield that it gives you. And then thereafter, what Morgan Stanley is saying is that it trades at 6 to 7 times earnings, but FY27. So for a 6 to 7 times earnings, when you have such a large opportunity, which you've just described, IREDA is obviously not in a state to capture that full opportunity. There has to be an REC, there has to be a PFC, which lends and which kind of takes up a lot of the weight. And then there is IREDA, which is faster growing and therefore trading at 4 times book. So of course, you've got plenty of options suddenly in this space. And that's exactly what they're flagging off, and they're saying there is value, the risk reward is favorable.
Yeah, and I feel that the other banks will also start from this sector rather than other sectors, basically, because this is a sector where everything is being laid to rest in terms of the kind of targets and the pipeline and the and how to achieve it over a period of time. So it's been done in that sense.
Okay, let's start with questions. Kartikeya Pawar, hi guys, thanks so much for providing so much insight. Love this channel, love you guys. Thank you, Kartikeya. We love you too. A humble request. At times we do get a little repetitive with the so-called known stocks. The broader markets needs a bit of you. Oh yes, nothing on Industar and selling of Gravita as yet. You want to talk about that?
If you can speak about Industar. Gravita is into recycling, right?
Yeah.
And that's a space which is going to go up a bit. And I was speaking to Samit about it yesterday. We were just discussing that this 50% tariff which is coming on copper. And then there was a report that came in saying that our copper capacity is around 500,000 tons, and we need and we import 1 million tons from overseas. What they're expecting is that there are so many capacities coming in over the next 2 to 3 years that our copper capacity will go up to 2.5 million tons over the next 3 to 4 years. And in the next 10 years, what is the requirement is 10 million tons, and we will be only able to do 6 million tons. And that's where recycling of copper is going to come into play. And I think Gravita is into recycling, and there are many more players who are coming in that space, because this is becoming a very lucrative space with respect to recycling of metals, especially at a time when you have so much of geopolitical uncertainty on tariffs and others. In India, copper is there everywhere, whether it's in semiconductors or chips or hypersonic missiles or anything. You saw what Trump was doing on copper, right? In the sense, putting 50% tariff on copper. They want everything processing to be done, and that's what is happening in India also. There are a couple of companies which are expanding. Hindalco is expanding. You have Adani, which is setting up there. You have Vedanta, which has a bit of copper expansion plan which is in place, and there are others also which are looking at it. So there is an expansion plan in place. So, but the informal market of the recycling market is so fragmented that there is a huge opportunity for someone to come and make it more organized and take that market away.
So, Kartikeya, the other piece is with regard to Industar. Now, frankly, I mean, I would love to kind of give you something on Industar, which I've read in the past, but I don't think I have the latest with regard to Industar. And we're being candid. Yes, maybe we're disappointing you a bit, but we don't give you information which we haven't really read or haven't really understood fully. And it's not possible to read and understand everything. So you'll have to appreciate that part as well. But that being said, I will try to read up on Industar, and I will hopefully give you a perspective very, very soon. Thank you, Kartikeya. But Walcott is at a decadal breakout. Do you think fundamentally the company has made a turnaround? Do you have view with regard to Walcott? I don't.
No, there's a turnaround. There's a QIP also there so there is a turnaround of the company which is there. But I think we should get Varsha in one of these days and
we will
speak about pharma companies, because she can put in a good perspective of what's happening in each of
Why didn't we get her today, guys?
We can. I think she was busy with something. So
okay.
MP Jain, how are transformer stocks? How are these?
I was just looking at the price to earnings for Trill. Yeah, it trades at 73 times. Now, this is a stock where you've got very strong tailwind of growth. Again, we spoke about power, and we spoke about just how large the opportunity is. So someone like Transformers Rectifiers is sitting on a gold mine in terms of opportunity. But everything's about execution, and everything's about global scarcity as well. So transformers have been it's become very commoditized, right? Unless I'm getting this wrong, it's become very commoditized over the last couple of years because the global demand is just so strong, right? The sense seems to be, whenever we speak to these companies, that it is sustained. But that's also the risk that you run. That if it does not, then these valuations of 73 times can come off also very, very quickly. So it's just that you should be cautious when you're looking at a company which is valued at 70 times plus. This phenomenal tailwind, but at the same time you should be cautious.
I think on Monday I wrote an open interest piece on transmission and distribution companies, and I found one thing very interesting, that in the last 2 years, many of these companies have seen their order book double and triple. From FY23 to FY25, now Trill, what you transformers and rectifiers, which you're talking about, it's sitting on a order book of 5,132 crores at the end of FY25, which is 2.5 times the revenue run rate which is there. Which is book to bill ratio is 2.5 times, which is 2.5 times, and this order book is going to go up from here on. And many of these companies will have to put in a lot of, I would say, the kind of capex to manage that kind of inflow which is there. Because at current capacity, they will not be able to do that. So there is a big opportunity for them, and there's a big opportunity for them to come back in the market and raise funds as well. Because there is, otherwise they will not be able to make it. There's no point you sitting on 4 or 5 years of, order book, and you're not able to deliver it. These are each of the projects, which whether it's a transmission project or whether it's a substation project, or it is an HVDC, high voltage direct lines which you set up. These projects have a tenure of 18 to 24 months. So once you get it within 24 months, 80 to 24 months, you have to deliver it. You cannot be sitting on 5-6 years of order book there, because then you lose out on that. So you will have to create that capacity to expand it. So watch out for the order books and the execution capabilities which these companies have.
Okay, I want to talk a little bit about earnings one more time, and this is with regard to what JP Morgan forecasts in terms of Nifty. They're expecting the Nifty to trade between 26,500, which is their base case, and 30,000, which is their bull case, over the next 6 to 9 months. For Nifty 50, they're expecting an aggregate. Oh, by the way, 30,000. I'm just in the next 6 to 9 months.
Niraj had.
If Niraj sir is watching, please, sir, comment.
Comment on this.
Clearly, JP Morgan is supporting you.
JP Morgan is much more bullish than you are.
But they are expecting revenue growth of just 4%, EBITDA and PAT growth of just 7% YOY. So that's with regard to what JP Morgan is penciling in.
When we were looking at that modeling, 5% growth in PAT or EPS was giving us around 27,500 by next September, next year. That was the kind of target, and Niraj had 28,500 and I had 27,500, which was there.
No, but markets do overshoot and undershoot. So.
True, but he's talking of PAT growth of 7%, which is the EPS growth of 7%. He's talking about.
Yeah, sure.
So that PAT EPS growth of 7% would take it to 30,000. So that 2% extra growth is been penciled in by JP Morgan. It needs to be seen whether they will be able to get that.
Do it or not. Fair point. Fair point. So with regard to IPOs, there is this Smartworks IPO. Have you spoken to management? I'm sorry,
I didn't get to speak to management, but I did go through the RHP, and you should also go through the RHP because it's a co-working space. It has over 2 lakh seats in 50 centers across 15 cities. It's growing at a decent rate at that from a top line point of view and a good decent EBITDA margin, but it is doing a lot of capex because I think the model is not a little asset light in that sense. So they're incurring a lot of capex every time they're setting it up and getting it. It's not the same thing which Office does. Office is on another co-working company which is listed and listed. But they have a little asset light model. They have a revenue share model, so that helps them in maintaining margins and profitability. Smartworks last 3 years, they've been making losses. I think FY25 they made a loss of 63 crores. The losses do have come down from 100 crores 2 years back, but I don't think with the kind of work capex they have earmarked for next 1 or 2 years, which is getting into expanding in 4 cities, which includes Kolkata, Mumbai, Pune, and Bangalore, and Kolkata, and I think there's one more market which there are 4 markets which they're getting into. That will increase the capacity by another 20% odd. But they have a 225 crores capex plan for that as well. So 400 crores of debt they're sitting on the book. 115 crores is what they're going to pay off. So they still have enough debt on their books, and I don't think they're going to be profitable in 26. That is something which is going to be so. I was telling that if you really want to go into office spaces industry, why don't you wait for the company to list and buy? Because I don't think there will be any list or very limited listing gain for Smartworks. It's not going to be an easy one for them to go through, especially because last 3 years have been loss making for them. And by the way, June 2024 they did a preferential allotment at 269 and they're coming at 407 per share. So
yeah, so I mean, see, I remember the words of Ramesh Damani when he speaks about IPOs, that the person who's coming out with the IPO knows much more about the company than you ever will. That's point number 1. And he's a seller. And therefore, he has, not only does he have information, he's the one who's selling the stock to you. So you have to be careful and you have to be cautious when you're...
Now you have to look from a point of view whether you need to have office spaces in your portfolio, because it's a growing space. See, not these guys are into SME space where small and medium enterprises which require 300 seats across cities. It's not maybe 50 here, 50 there, 40 here, that's kind of spread. They're small enterprises. Instead of setting up the entire office, they go to our Smartworks and they say, okay, I need 300 seats across 15 cities. Give me seats in that way. So I don't know whether it's a good model, but it's a very asset heavy model which they're looking at. Actually, it's not a light model which they're looking at. And
if you want to understand asset light, asset heavy, go check out KYC on Office Space Solutions. We've covered these models on asset heavy, asset light over there. So maybe
it will help you there. So look, you want in any ways you have to look at RHP and read RHP before investing,
and especially the risk section.
Risk.
What about TFS? The IPO is still on, right? Day 2
No,
is what I read.
Didn't it close yesterday?
Did it?
9?
I don't know.
It closed yesterday.
Maybe
2.8
it's my
times.
error. Huh.
2.8 times is it was subscribed yesterday.
Okay, so then that's irrelevant.
Yeah,
nothing
so
that
it's
we
going to
can
list
do
on
today.
Monday.
Yeah, perfect. So we'll talk about
Yeah.
it on Monday. Sorry. So I have to go back to questions. Any trends with regard to pharma? Now, we spoke to various, experts yesterday as well with regard to where pharma is concerned. They are saying that it's a wait and watch on pharma, frankly. They are saying that there is lack of clarity with regard to tariffs. We don't know what's going to happen in the next year and a half. And every other week, Mr. Trump is coming out and giving a very different bullet when it comes to tariffs. Every couple of weeks, he pulls out his gun, fires a bullet, fires a tweet, and then leaves it there. So basically, you have to wait and watch and allow the uncertainty to settle first, and then decide and pick. That is what a lot of experts are saying. So yesterday we saw pharma rally, but we saw an equal cool off as well on the Nifty pharma.
The reason pharma was rallying yesterday was that Trump was saying that he's going to put 200% tariff, but that tariff will come in a year or a year and a half later. So he's basically pushing the can down the road. So the pharma stocks were little relieved that there's nothing immediate which is going to impact them. And if you're not able to set up your shop in the US, then you will have that tariff coming in. But from a pharma point of view, numbers have been a little warm in the month of May, June. That's what Varsha was telling me, and these are the sales numbers which come in on a on a monthly basis. So my sense is that domestic pharma, even some of the big brokerages are advocating that stick to domestic consumption themes where pharma has a higher sales to the domestic market as compared to an export. Especially if it's linked to US, there is a lot of uncertainty which is going to come in. So stick to companies which have a good domestic revenue stream.
Okay, guys. Tanam Gupta, your take on Sky Gold, Zaggle. We'll try and take some of those questions on close, but sir, frankly, we're out of time because I need to go back and prepare.
Yes.
So apologies, guys. We're gonna have to cut this right here. Thanks for tuning in. Just one quick comment. We have Kartikeya Pawar who's replied to what we've said. He said, "Thank you. No, you never disappoint. Thank you, Kartik. Kartikeya. This means a lot. You guys are super busy, so understandable. Not really. We're not busy, but we want to be. We want to pretend that we are. So
yeah, but do keep reading on stuff on NDTV Profit or watch India Market Close. I think they're going to take a couple of questions of yours.
We'll try to take a couple of questions. We will.
Yeah.
Thank you, guys.